This is the tax platform informing the nation on tax matters. Good day. Today we are going to focus on another interesting topic: conflicts. The taxpayer can be in conflict with the Commissioner General or with the taxpayer or taxwoman. And when cases like this come, obviously you may be happy with the decision of the Commissioner General, or you may not be happy. And that's where the conflict arises. And if you are issued with an assessment, in terms of the law, you may object to such assessment. And of course, you should have valid reasons and documentation to prove the commissioner otherwise, because when it comes to tax and appeals, the burden of proof is always on you who's objecting or who's appealing. And this appeal may be for value-added tax, income tax, transfer duty, or even inheritance and donations tax, also known as capital transfer tax. And this assessment, of course, may come from the return that you have submitted 2 years ago and was processed because you have been audited, or there was an investigation that was done, or it may be done at processing level where you have declared taxable income of 100,000 as an example, and while processing the return, an adjustment is made where the commissioner feels that there is some expense that is not allowable that we have allowed, or there is some income that is taxable that you have not declared, or that you have treated as not taxable. So those three cases may result in there be an additional liability imposed from you by issuance of an assessment. So for VAT purposes, you need to object within 30 days, and you should have paid the amount in the assessment, and so that what you are objecting to or your objection can be considered. If you are not able to pay, of course, then the Commissioner General can still accept that as a valid objection, but then you should provide security for that. Very stringent rules for objections when it comes to VAT. While for other taxes, you can appeal within 60 days. That's 30 more days more than VAT. And you should only pay what you had declared for income tax and the other two. So if you have declared 0 for transfer duty, that means you don't have to pay anything. If you have declared 100 for either capital transfer tax or income tax, you also don't have to pay anything, because for those other ones, it's as per what you have declared and not what they've raised as an assessment. That's when the objection will be valid. And of course, even for other taxes, if you have filed outside the 60 days, and for VAT filed outside the 30 days, you can still be allowed to object, and it is accepted as valid, or as if it was filed on time, provided you can give valid reasons why you had not objected within the stipulated time. And as long as there is no unreasonableness from the taxpayer side detected, then you can file outside the prescribed time. But of course, it is always advisable that you file within the 30 or the 60 days, depending on which tax you are objecting to. And the other thing is that because you may be given an assessment for different taxes. It may be advisable to appeal or object to those assessments separately. The income tax has its own objection letter or objection paper, VAT, and so on and so forth. We will clarify why this is important when we go into the next episode of the next stage that you can go to if the commissioner has not allowed your objection, or where it is allowed partly and you are still not happy. But of course, if you are happy with the final decision the Commissioner General has made, and that means your conflict ends there and it is closed. Hope that was insightful. Remember, we are available across all your favorite podcast platforms: Spotify, Apple Podcasts, Samsung Podcast, and the rest. Thank you and have a good day.